This video is being created to inform the citizens of the state of Kansas that the Chiefs Star Bond is going to cost the average Kansas family about $350 a year for 12 to 15 years at least. In this video, you're going to see what they told us, why it was wrong, what the financial impact will be, contrary to what they told us, and what we can do about it.
And very significantly, this agreement protects Kansas taxpayers, with the state's portion coming from revenue generated by the stadium, entertainment venues, and the Star Bond District, as well as lottery funds. So let me repeat. The state's portion of this project is paid for with revenue generated from the project, not with new taxes, not by shifting funding from other essential state services, but with the new revenue that will be generated by the project itself.
And we can do it without taxing our citizens. We can do it without a tax increase and with funds traditionally earmarked for economic development.
The people that go there will pay the tax to pay for it. The people that drink the liquor will pay for the tax.
Rachel Willis, spokesperson for the Kansas Department of Commerce, in written testimony said that the bonds, including the interest, would be repaid solely from the revenue sources provided by the new sales tax generated. She also made that same claim multiple times to organizations like WIBW in Topeka, the Johnson County Post, and in other testimony. And of course, we have this gem from Ty Masterson, where he said, "This will not cost one more penny for Kansas taxpayers."
Sure, our district might be bigger than what we anticipated, and there might be some inflationary breakage there.
And the great thing about it is it all comes at zero additional tax burden to taxpayers.
The Chiefs Star Bond was a flawed concept from the start. It didn't account for inflation, which the Chiefs' presence has nothing to do with here in Kansas. It didn't account for organic growth, which is not caused by the Chiefs Star Bond. It didn't account for cannibalization, which is a real thing and can be shown through the Census Bureau's County Business Pattern Database. And it didn't define the benefits that people of Kansas were going to receive. It didn't give us a return on investment or an internal rate of return or anything like that. As part of the Star Bond justification, David Toland, in fact, bypassed this whole discussion. He wrote, "Each of the Star Bond projects is unique in its own way and contributes to the economic vitality and quality of life." Well, we're all for quality of life, but at what cost? So to be perfectly clear, the Chiefs Star Bond redirects money that would normally flow to the state general fund, and it redirects it to paying off the bond. The money funds a private development that pays no property tax, where 100% of the inflation-generated tax revenue increases goes to pay off the bonds, and where profits flow to a private company. And here's the result. Following our calculations based on Kansas sales and use tax numbers provided by the Department of Revenue for the Chiefs Star Bond District.
So here are my assumptions. Hit pause if you want to read them. I'm not going to go through them. But I should note that I'm giving you more information than we've received from the Department of Commerce about the Chiefs Star Bond and its costs. All right, so what I'm going to do here is I'm going to start with the sales tax from 2026 that we would expect to collect. We're going to increase it every year by inflation and natural growth. None of this growth is generated by the Chiefs Star Bond or by the Chiefs' presence in the county at all. This is just natural growth that has always occurred and always will occur. And what we're going to see here in a second is the cap that is placed upon the tax revenue collections by the state. So the amount above the blue line is the amount that would normally flow to the state just from natural growth. The amount above that is above the base revenue that would be set by the star bond. So all that revenue in the red there is money that would have normally naturally flown to the state as a result of inflation, and instead it goes to pay off the Chiefs bonds. And over a 12-year period, it's about $2.7 billion. Now, it's actually more than that if you talk about the ancillary build out by the Chiefs. This is the stadium only.
The Chiefs' lawyer, Corb Maxwell, testified that these calculations that they did showed that the Chiefs star bond will be paid off in 12 to 15 years. Well, that's great. All it means is they're pulling money out of the state general fund at a faster rate than they expected. They think this is a success. But that money must still be replaced in some way if you want the state government to continue to function.
And the math is simple. If the tax loss is about $2.7 billion, there are 1,300,000 taxpayers, you're talking $2,100 a taxpayer over a 12-year period. And if you live in Dodge City, Hutchinson, Manhattan, it doesn't matter. Wherever you live in Kansas, you're going to help fund this shortfall. Now, there's one very important point that's missing here, which is that the numbers we talked about are for the stadium only. This does not include the ancillary development, which is another $975 million in debt. But if this actually happens, and the numbers we've been discussing go up by about 50%, and you get a total bond amount that goes from 1.8 billion to 2.775 billion. Individual cost over 14 years now instead of 12 goes from 2,100 to 3,200, and family costs over that same 14-year period goes from 4,200 to 6,300. So here's a clip from the Project Monitor 2.0 document that shows that there's a possibility that we could have a $2.775 billion debt.
Now, if you live anywhere in Kansas, you're going to help fund this shortfall. Now, why would that be? Well, if you agree that the state is already about $400 million a year underwater, and we're fixing it by taking money out of our rainy day fund, and if you agree that the Chiefs are going to add another $200 million a year to that, pulling it out of the state general fund, and if you agree that we have to backfill that money at some point, we have to cover those losses, well, then the question is, how can it be done? Well, the legislature is all about reducing income taxes, so we're not going to increase income taxes to cover it. State doesn't collect property taxes in any significant number. And what does that leave? Retail sales taxes. Now, they can increase those retail sales taxes statewide, which would take care of the issue. Increasing them just for Johnson County and Wyandotte County is probably not tenable. It's just too big of a number.
My apologies, this is my error. Increasing retail sales taxes in Wyandotte County and western Johnson County won't do any good, because that would just count as incremental revenue, and it would just go to pay off the bonds faster. It will not help our situation with the state general fund.
So there we are. Retail sales taxes statewide is the only way out of this. Or we can just keep draining the rainy day fund and, let somebody down the road 4 or 5 years from now deal with it. And that's unfortunately a possibility.
This all leads us to the big question. If you could vote on this project, how would you vote? And if your legislators supported this tax expenditure, would you vote for them? And so who did drive this legislation? The four horsemen, you might say. Laura Kelly, the governor, Ty Masterson, the Senate president, Dan Hawkins, the Speaker of the House, and Sean Tarwater, the Commerce chair. Now, Laura Kelly is termed out, so she's not up for re-election. Dan Hawkins is running for insurance commissioner, so he's out of the legislature. That leaves us Ty Masterson and Sean Tarwater. Ty is running for governor, and so we need to ask, would you want a governor or a representative who are willing to saddle the entire state with a tax burden that benefits one narrow area, that area being in Houston, Texas? Now, they'll all scream and yell, economic activity, economic activity. Sure. And it all benefits one very small group of people, and it imposes a tax burden on the entire state. So you've seen the costs, and now we have a decision to make. Do we want to put the brakes on this? Representative Tarwater thinks the deal is done, that a deal is a deal, and that Project Monitor 2.0 is already done. But as citizens of the state of Kansas, do we agree? Do we think that he's right?
The deal is the deal. Stadium's going to be built. It's going to be owned by the state.
So Tarwater was actually wrong. There is one possible exit ramp, and it's extremely unlikely and almost impossible. It's a special session. Special session can be called by either the governor or the legislature by a 2/3 vote in both houses. The governor is not going to call the special session, and the mechanism to get the legislature to call the 2/3 vote in both houses is difficult, but we won't go into that. So let's talk about what we can do. So here's what we need to do. We need to contact our legislators and tell them in no uncertain terms, despite or regardless of what your opinion of the Chiefs is, that Kansas taxpayers should not be expected to subsidize the Hunt family, because that's what this exactly is. So here's the language that we need passed. My apologies for the small print. It's the best I could do. But the core language is the base year amount established by the Secretary of Commerce shall be adjusted annually by the percentage change in the consumer price index. What this means is that amount that I showed you earlier, that red amount that is now going to be appropriated by the chiefs, will instead go back to flowing to the sales general fund as it did historically. If you are wanting to impact this, the way you need to do this is you go to kslegislature.gov or just search on Kansas Legislature. Once there, you'll see Find My Legislators on the left side. Click on it. That will take you to a screen where you can put in your address. You put in your address, and then it will show you your two legislators, your senator and your representative. You can click on each of them. It will show you their email. It will also show you their phone number. So a phone call would be very effective. Now we're running out of time. So seriously, we need to do this now. We cannot wait. Remember, we need 2/3 of the legislators on board with this. So your legislator matters. If you have any interest in how this actually happened, please see my next video titled, amazingly, Chief Starbond, How It Happened. But if you watch that, it is the most ugly, disgusting thing that you can imagine in regard to how legislators do things. I mean, it shows how we got totally run over by this process. But anyway, up to you. If you want to make a difference, if you want to reduce your taxes, this is how you do it. So let's get on it. I didn't want to do this because this whole thing is not about me. But one of my reviewers said they're going to want to know who you are and what you're about. Well, fine. You can call me Joe Curmudgeon. My qualifications are, I got a BA in economics. I got an MBA in finance. I was a prior internal auditor for a Fortune 500 firm. And I have a Lean Six Sigma certification, for those of you who know what that means. I'm just an ordinary Kansas resident, 70 years old, who saw these numbers they were putting out and immediately realized they were bogus. I got irritated and started doing this. And I absolutely hate liars. Did I tell you I was an internal auditor? And that is all I have to say about that.